Hey, good morning, everybody. Welcome to Friday. What is it, October 30th? One more day of October. And guess what? Next time we get together, it'll be November. Hard to believe we're down to 2 months in 2020. I know a lot of us are thankful for that, right? That maybe 2020 is finally going to get over and 2021 is going to be better. And I am hopeful of that too. Hey, before Dave gets on and we start talking about what's happening in the markets today and earnings, got a lot of good earnings today. I mean, good companies, not necessarily good earnings. But some interesting stuff. We got the FANG stocks reporting today, so I know you'll want to stick around for that. But let me tell you, I've put together a webinar that I hope that you'll join me for. I've tried to make it some convenient times for people to log in and get connected to help take some of the uncertainty out of the marketplace and some uncertainty out of where we are right now. And so we've developed a webinar. There will be a link in this post that you can go to and register for that webinar. Pick the time you want. There's a couple different times there. And I hope you'll join me because we lay out a lot of things that could affect us over the next actually, could definitely affect us throughout this year, but could affect us actually into 2021. And so I think you'll want to join us for that. But like I said, there'll be a link in this post where you can register for that video or that webinar. And I look forward to you joining me there a lot this weekend. So, hey, Dave will be with us here in just a moment as we talk about what's happening in the markets today, which, folks, is not pretty.
Every darn year. It's 8:40 now, 20 before 9. Time to check in on your money and see what's happening on Wall Street. It ain't pretty so far this morning after a decent day yesterday. It's kind of turning the other way today. Let's head downtown to Statler Financial Services, where Phillip Statler is standing by with all the data. Phillip, how are you this morning?
Hey, man, other than, a power outage this morning that put me way behind, and so I'm at the house this morning. Got a repairman here working on some stuff. So, but I didn't know that was going to happen with the power being out almost 2 hours this morning here in my location.
Yeah, it was actually your Facebook post that prompted me to go looking and find out what the situation was. They were saying it was going to be back on by 9:30. I'm glad they beat the schedule to be able to get you back up and powered up again down at your place, because we got an awful lot going on today, and I'm glad to have you on the air with me. We start out with setting the table yesterday after a really crummy start. We ended up with a green day. Dow was up 139. NASDAQ went through the roof all of a sudden, up 180 points. And Standard & Poor's was up 39. Didn't erase the losses from the day before, but at the very least it was green ink. Now we start out the morning with personal income reported, consumer spending reported, and the month-to-month personal consumer expenditure report, and they were all favorable. Income up 0.9% last month, which ain't half bad and better than they expected, right?
That's right. Yeah, personal income. That was, I think, a pleasant surprise. Obviously, it depends on who you look at. My people expected 0.2%. The guys at CNBC, whoever they use, expected 0.4%. So in either case, it was a substantial beat when it comes to personal income.
The interesting thing was that personal income increased by 0.9%, but we spent 1.4% more than we did, which means we're still running up the plastic, right?
Well, that is true, but spending means that helps the economy, right? Especially now in the position we're at. And so that spending was better than expected. They expected consumer spending to be about 1%. And it came in at that 1.4%. So I think that's probably a good thing right now, given where we are economically. It does show that there's a little less fear out there, because remember when COVID first hit, personal spending, consumer spending had gone next to nothing because everybody was just afraid to spend money. So at least we're seeing a little bit of release there.
Yep, this is one of those atmospheres in which good news is bad news. The public service campaign to save more, save more, save more. No, right now we want you to spend more. It's a consumer-driven economy. So, yeah, an increase in personal spending in a setting like this is good news. And then we add in one other item from the government data dump, personal consumption expenditures on a month-to-month basis. That inflation rate up 0.2%. We were talking about the annualized rate yesterday. 0.2% month to month. That's pretty much within the target range the Fed wants to see.
It is, and the core and the whole PCE all came in the same at 0.2, which the core, that's what was expected. So nothing really earth-shattering there. It's that's not moving the markets. I would expect the other stuff maybe to help a little bit, but that's not what you and I are seeing.
Understood. Yeah, overnight the futures took a major dip shortly after midnight. The best explanation we can come up with is that the nation had another record day in terms of active cases of COVID-19 detected, and that kind of foul temper is kind of continuing with us this morning. Looks like the foul temper is taking over with some earnings reports, too. The big internet companies reported, and probably the poster child for getting their butts kicked around the parking lot is Twitter, because they're on top of my big loser list this morning.
The whole group of them really didn't have too bad of a quarter. I mean, you talk about Twitter, they actually beat estimates by almost 3 times what was expected.
Really?
So earnings were good. And revenue was well above the consensus estimates also. But so here's the deal. There's always a fly in the ointment somewhere, right?
This is a big fly looking at what's happening to their pre-market trading.
It is. So Twitter posted its slowest user growth since late in 2017. And so because of that, we're seeing huge changes within Twitter. And so that's what's really putting some pressure on them. They're down a little over 14.5% this morning.
Yeah, it's an absolutely precipitous drop in their stock. And they're still growing. They're just not growing as fast as anybody wanted them to, right?
Oh, that's right. And, the stock price is based on future growth, right? And so that caught everybody by surprise, and they're paying the price for it this morning.
At some point in time, these social networks are going to hit saturation. I mean, it's kind of like toilet paper. Everybody has some, and eventually everybody that's going to want one is going to have a Twitter account. And somewhere down the line, I mean, growth has to level out. You got to make money out of what you got.
Well, that's true. You're absolutely right. And at what point that is the big question, right? So let's look at a couple other of those platforms.
Household names, I know.
Man. I mean, all the big names reported. So let's start with Apple. We'll just kind of go down the list here. We got Apple. They not a over the top quarter. They beat by 3 cents a share. Revenue topped the forecast. However, again, a fly in the ointment. iPhone sales tumbled 21% during the quarter. Again, mostly because of the delay in launching the new iPhone 12 until October. So that's affected Apple today. They're down 3.5%. And so that's not good for their stock today.
The company that big, 3.5%, that's a running ton of money to lose on net worth.
Yep, it is. You're right. So we'll see some of that happen today. And then we have Amazon. Amazon earned $12.37 a share, way better than the $7.40 that was expected.
Okay.
So what's the fly in their ointment? Well, costs have jumped during the quarter because of all the COVID stuff. They're also adding staff to get ready for not just the stuff that's happened, the surge during the pandemic, but also to get ready for Christmas. And they're really uncertain of what the Christmas season is going to hold for them. And those are all the kind of things that they talked about in their quarterly update. So they are trading down 1.5% today. And Amazon's a pretty high price stock at 3,100 or 32.11 is what it closed at yesterday. And so it's down almost $50 this morning a share.
Holy crud.
Yeah,
No matter how well you do, even the smallest fly in an ointment can cause you misery, can't it?
that's right. And so let's go to the next one.
Yeah.
Facebook beat all the way around. They're beat on earnings per share by about 80 cents a share. They beat on revenue. And so you think, okay, look at that stock. It should be doing well.
Mm-hmm.
Well, Facebook warned of some significant amount of uncertainty in their growth coming up in future quarters. And so they're trading down this morning about 0.5%. So,
wow.
yeah, so everybody it seems like all those guys are getting beat up, but I got one bright spot.
I was going to say there's got to be one company doing well today.
One of them doing well, and the stock price is doing well. So, and that's Google, better known as on the stock market as Alphabet. Alphabet earned $16.40 a share. Remember, it's a high price stock, and better than the $11 that was expected to earn. Revenue exceeded the forecast as well. They saw huge growth in their digital platforms, and get this, YouTube exceeded the $5 billion mark in ad revenue. So some first time things for them.
Wow.
So good news for Google there, and they're parlaying that into their stock price this morning. The only one that is, they're up almost 8% this morning before the market gets going today.
Well, about time one of them did well on the stock price anyway. I got to assume a little bit iPhone sales weren't what they expected, largely because of the delay. A big part of Google's integration into the world is the Android marketplace because they own the software for that. So that kind of gives there's a zero net basis on at least a portion of both Google and Apple's business.
Yeah, that's true. Hey, let's talk about the oil industry real quick. I've got two reports there. Both ExxonMobil and Chevron both reported. So Exxon lost 18 cents a share for the quarter. That's not good, but it's better than what was expected. They were expected to lose about 25 cents a share. Revenue did come in above what analysts had expected. They're making plans for smaller capital expenditures next year. So they're doing some stuff there, and they are trading down 1% this morning. And then I got Chevron reported. They actually made a profit of 11 cents a share, which was better than the loss. They expected them to lose 27 cents a share. So revenue for them, though, did come in below the forecast. And they're working on managing their costs, trying to do a better job there. And so they're trading down 0.3% this morning as we get ready to open the markets today.
Yeah. When we get to the price of oil, we'll probably explain why revenues are off on the oil industry at the moment.
Oh, yeah.
Yep. Stocks yesterday were up. I'm seeing a lot of red this morning, Phillip. 45 minutes early. How bad is it so far?
Hey, it is improving. It is still drastically red, though. But when you and I first started talking, it was hitting almost down. The Dow was down almost 300 points. Mm-hmm. Now it's down 199, which is 0.75%. The S&P 500 is down almost 0.7%, and the Nasdaq's down almost 0.9%. So we are seeing a lot of red ink this morning. We'll have to see how that parlays out for this really last trading day of October. And the commodities, we are seeing finally a little bit of an improvement on the gold and silver. We got silver up 1.5%, and we've got gold up 1%. Crude oil better than where it was yesterday when you and I talked, but down about 0.25% this morning, down to $36.10 a barrel right now.
And that's still El Stinko from the energy standpoint. By and large, yields on the Treasury bills are going up a little bit, indicating there's a little more equity interest somewhere. We just don't know where for sure. Overseas markets, Asia had a little bit of a sell-off, 1.5 to 2 percentage points off on their markets when they closed. British and German markets, just slightly in the red. They're kind of following our lead on the coronavirus concerns this morning. Phillip, it's volatility. It's a weird time, and all we got to do is get one report out of the government, and the markets can throw 300 points off at a heartbeat. That's not a time to get close to retirement and stay with it with a lot of risk. How do I find you in order to get that risk out of my portfolio?
You know, Dave, they can give us a call at 863-382-0037. Or this weekend, they can join me for a webinar. And all they have to do is go to my website, statlerfinancial.com. Under the events tab, there's a registration link. They can register today for that webinar that's going to be tomorrow and Sunday. Just before the election, we want to get some stuff out there for people to help calm their nerves and add a little certainty to where we are today. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730.
All righty. I do appreciate it, my friend. You have a good weekend. Keep the lights on, and we'll see you Monday, all right?
All right, man. You have a great day, a great weekend, and I'll talk to you in November.
Yeah, that's right. Next month. Thank you, Phillip. I appreciate it. Be well. Okay, it's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, everybody, remember what I was saying. Risk in your portfolio is not a good thing. Hey, we're heading to this election. Jump on the webinar with me this weekend. All you have to do is go to my website, statlerfinancial.com. Under the events tab, there's a link there to where you can register. Actually, there'll be a link in this post where you can link in and join that webinar. Register today. I look forward to seeing you over the weekend on the webinar. Bye now.